Welcome to today's Commodities Corner. I'm Elaine Stenson. Global oil prices diverged on Thursday, holding close to recent lows as traders balanced upbeat Chinese economic data against stubborn worries over weak US crude demand. I'm joined on the line now by Thina Saltvedt from Nordea. The price of Brent North Sea crude for December delivery dipped 16 cents a barrel in London midday deals. Thina, were you expecting this sudden turnaround?
Well, the turnaround is often difficult to predict, but I've been surprised that oil prices have been keeping up as much as they have, because this is the part of the year that usually the pressure in the oil market is a bit lower, and that's because we are in a period where the demand for oil is usually a bit lower. That's between the driving season in the summertime and between the winter heating season. So I'm more actually surprised that price has been so high than the turnaround we're seeing in the market at the moment.
The market hit multi-month lows on Wednesday after a US oil inventory report showed a surprisingly large build in supplies, sparking concern over weakening demand in the world's top crude consumer. How much of a factor do you think the recent shutdown has in this?
Of course, 800,000 people out of work for 3 weeks almost. That does have an impact on the fuel demand. And I think this must have some kind of effect on the inventories as well. Of course, this is usually a time of the year when we're using less oil products, so the demand is usually a bit lower at this time. But I do expect that the shutdown, and at least it lasted for 3 weeks, that should have an effect on especially fuel demand, because less people are going to work. Quite a few of the different people has been working in areas where using a bit of fuel as well. So I think that had some kind of impact on the data. But of course, it's a bit early to say. But
Okay.
some impact on fuel demand, I think it's for sure.
New York crude futures had also fallen on Tuesday, dented by news that the US economy added nearly 150,000 jobs last month, far less than the 180,000 that were forecast. Are you concerned about demands on account of this?
I'm not too concerned yet, because employment figures from the month before was actually revised up, so they were a bit higher than expected. Often we see a bit of swings and a bit of noise in these figures, so they might even be revised up for the next month or when the next figures are coming out. Of course, there is time to be worried if we see this continue for the next few months, because the US is of course still the big or the largest oil consumer in the world. So if you see slowdown in the US, this will have an effect on the oil demand going forward. But still, we keep up with the belief that US is still on track to see a better or improved economy going forward. Of course, the sudden or the recent problems in the public sector and the close down will have some impact also on economic growth in the US. So a bit more slower growth we will expect for the coming, or a bit less optimistic figures we do expect for the coming months. But still, I'm not too worried about a slowdown in the US yet.
Thina, thank you so much for joining me on the line today. And that's it for today's Commodities Corner. But we will be back on Tuesday with more. Bye for now.